Hello and welcome to this week's weekly financial update from RTS Financial Planning. Remember, this is the weekly update that tells you what's been going on in the world of finance over the last week to help you make better decisions with your money. As always, if you haven't already, please subscribe to the YouTube channel, and if you do enjoy watching this video, please give it a thumbs up at the end on YouTube. So, the stock markets around the world recovered some of their losses from last week as investors felt a bit more confident that a new US package of measures will soon be launched to help the US economy and its fight against coronavirus. There was an interesting situation in Japan, though, where the whole Japanese stock market went down for at least a day due to a technical glitch, which was slightly unknown at the moment. What's the actual cause? But the Japanese stock market is interesting. The Tokyo Stock Exchange is worth around £4.6 trillion, making it the third largest in the world. So it does have a bit of a knock-on effect to stock markets around the world if one has gone a bit funny. Close by, there was good news for China, though, as recent data that came out showed that the Chinese industrial sector had grown about 19% more in August than it did at the same time in August last year, which shows that China is still well on the way to recovering from the coronavirus impacts. It's actually predicted to be the only economy in the world that's likely to show some growth at the end of this year. And this, of course, is very good news for particularly European stocks, as China is a major customer of European companies. In the US, we saw the first live presidential debate this week, where Donald Trump went up against Joe Biden. The result of the debate doesn't seem to have changed much in the opinion polls, which Joe Biden currently has quite a sizable lead over Donald Trump. We will be covering the US election more in the next few weeks in different articles and its impact on what world stock markets could be. But for now, I'll just say that investors are currently thinking that if Joe Biden does win the US presidential election, it's likely there'll be even more stimulus pumped into the economy, the US economy in particular, and that actually taxes could rise in that country for companies. In the UK, the Chancellor announced that he was scrapping the upcoming budget, as he was saying that now is not really the time to be planning for the future as we still deal with this pandemic. He did announce a replacement of the job retention scheme, which aims to still try and support jobs and stop mass unemployment. There was good news for people selling their homes, particularly if you're downsizing, as September saw the fastest rate of growth in house prices since the aftermath of the Brexit referendum, with the average house price in the UK now standing at about £226,000, 5% more than September last year. There was more bad news for savers as the popular national savings and investment products had their interest rates slashed. So the fixed interest and the easy access interest accounts had their interest rates put down to rock bottom, and this has led to other banks following suit. These rates were some of the market leading rates, but unfortunately, these have all been lowered and other banks have also cut their rates too. So it's really hard to find a decent interest rate for your savings now. This also impacted the popular premium bonds. So the premium bonds price rate in December is going down from 1.4% to 1%. And what this means is currently you've got about a 1 in 25,000 chance of picking up a prize, but following the rate slash, you'll be 1 in about 35,000 in terms of winning a prize. So is it really worth now trying to move your money around and pick up the best interest rate? It is very difficult. There's not a lot to choose between all the main banks, and it might not be worth your time doing it. The key point here is to not have more cash in bank accounts than you need to. As we've previously said, cash should only really be used for short-term goals, for emergency savings, money you need access to quickly. But for anything else, particularly your longer term financial planning, you need to be investing that money in an appropriate risk strategy. I hope you found everything useful today. As I said earlier, please give us a thumbs up if you like the video, and do leave a comment if you've got anything you want to ask. Until next time, take care.